Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Cardano, taking a look at the most recent price action of ADA and what I think is likely to occur next. So let's get right on into this, right? Cardano paired up with USDT here on the hourly chart and Binance is our data source. Let's go ahead and just kind of work out where we currently are. There's a kind of some interesting wicks in here that basically come all the way down. They basically kind of create these invalidations of impulsive structures because they're very unusual. But what we'll do is we'll kind of go into this nice and steadily, right? So straight from the bottom here, we can kind of see that there's this interesting structure right in here. So I'd say that this looks like we are up here. We also have three waves just inside here, which is quite straightforward and easy one to kind of spot right in there. Then we come down in three. So all of this is corrective. There's nothing here that's kind of alarming me at any particular point. Then we get this nice run here, and it's all going great until we get to this wick. So it just looks to me like we come up in a really kind of nice-ish structure right in here. Small waveform, maybe 5, quick correction, then up again. So I'm going to look at this as like a bigger ABC structure with slightly higher to go. So if I go ahead and just snap this on to here, move this over to our wick, just at this low point just over here, which was 34.54 cent. Then, of course, we can see that we got rejected up here on the 786 at the moment. But it does look like we have to probably come up towards the 37.52 range. So this would look like this. We have this move up, come down into our wick, and we have this C wave to come up here, right? So we can see that we have that kind of three-wave structure. Internally, we probably are in some kind of strange... I'm not even going to say it's 5 waves necessarily. We'll see how it kind of goes. Now, what's interesting about 37.52 is, if I grab hold of this, it's an order block. Okay, so it's basically where the sellers are. So 37.52 is a sell order block right there. The buying order block is down here at 31. So interesting to kind of see how this is going to play out next. So keeping a close eye on all of that. So 37.52 on ADA seems to be an obvious area of rejection. Now, if I go ahead and actually leave the order blocks on and throw in the liquidity, you can see there's liquidity just up here. Just short of where we actually came to on that 786 line. It's actually between the 786 and the 882. You can see it right in here around that 37 cent area. So that's probably going to get taken out. And then, of course, we have this little spur up here towards this liquidity at around 37.41. And obviously, we've got the order block at about 37.52. So it does look like this liquidity, this order block are going to kind of get grabbed. We'll find the sellers and then potentially pull us down. Now, if I go ahead and remove the fibs, you can also see that there isn't terribly too much in long positions. I still think the price action here and the market makers and some of the institutional and the whales, I think that they're just kind of waiting for more long positions to kind of come in here, and until we kind of fill up some of these gaps, I'm not sure the price is overly going to gravitate downwards. So keeping a close eye on it, but there is limited amount in here. So basically between our 37 and pretty much 41 cent, there isn't terribly too much. Now, obviously, when it comes to these kind of cascading effects, we would need to see liquidity kind of stacked up a bit more so that these buy orders from these liquidation events can continue to kind of rally on up, right? But when we start seeing bigger gaps like this, there isn't necessarily going to be enough buying occurring here to take us up to those next levels. So when it comes to liquidations, not too convinced on that one. The same concept right in here, though, there's a bit of a gap. So even if we do have some volatility here with this, it doesn't look like an overly big order block. Sell order block. And so is it going to be enough to take us down here? Once we get to around the 34 cent, I think it's a pretty easy drop at that point to go down towards the 32s. And then there's buying order blocks right next to some of these liquidations around 31. That could be problematic, possibly, we'll see. But yeah, from here, I think we can get a bit of a cascading effect on the short positions, but we've got to get past a couple of gaps. Likewise, we've got to get past a couple of gaps on those long positions as well, or in the buying positions. So essentially here, what's interesting to me is that the liquidity doesn't seem to be quite where it needs to be just yet. So we could potentially see the price move up until we get more long positions stacked up in the system so that we can see more of a impactful move to the downside. Everything so far is corrective. There isn't anything else above and beyond that. If I go ahead and zoom out of this even further, this appears to be a B wave structure. It is, in my opinion, a 335. Then we go into this corrective structure right in here. Now, this particular area that we're correcting into with our range of resistance really coming in between 35.61 and 37.3, if we do go up like this, right, and we have 3 waves go down, 3 waves go up, I would expect 5 waves to go down and call it a flat correction. That gives me confidence to think that actually there's a good move to the upside still to be had here. But, you know, it's a bit early days. It's a bit early days to be too confident on that. Essentially, our structure still holds. We are still looking at a move to the downside. The structure is still there. There isn't anything too unusual about that. It is possible that we've bottomed out, of course, and I'm just overcomplicating it. We will acknowledge that, but it wouldn't make sense from a bigger macro point of view to kind of have that kind of done and dusted at that point. So it does look like we have to come down on a kind of larger scale of things. The smaller time frames, they can look quite bullish, but if you zoom out, you'll actually see all the bearish stuff as well. On that note, let's actually go up into our daily chart. And we can kind of see right in here, we are coming up towards our 200 EMA. We are, of course, above the 50 EMA, but not above the 200. So we're looking into that, see how that kind of goes in there. But you can kind of see how this structures out. Now, from our stochastic RSI, it has been correcting down quite nicely here. So although it's kind of potentially going to reverse up soon on this daily chart, it is moving quite nicely. So not too concerned on there. On the weekly standpoint, it is almost overbought. And in here, you can see that we are testing the resistance line right now. You can kind of see it right in there, testing the resistance that we had tested previously, although this line is not perfectly stacked up. So I'm going to quickly adjust this just so I can get that a little bit more accurate. Let me find where it would be. We've got this one here potentially, or, and this is the problem with trend lines, if I snap this here and I pull this into here, then we're testing it perfectly at the moment, potentially even breaking through it. So it all depends on where you start this by the looks of it. If you start it at the top and we hit the first 2, then we've only actually had 2 tests on it and so forth. Like I said, it's subjective depending on who has drawn the trend line. So I'm going to wait to see where the rejection comes from and see whether these things stack up or not. But that's one of the reasons I don't like trend lines. It does depend on who is drawing it. So yeah, we'll see. Like if I had it stacked up on this one here from the high of the 21st, and I draw it in and we line it up with the 4th of April, then of course we've had the break through the trend line. Okay, so just kind of keep that in mind. Depending on where we start here, we'll have a different output at the lower end. Def cross looming on the weekly chart, of course, overbought on the weekly chart, not looking overly positive from the bigger macro piece. Now, if I throw the volume in here, you can see that volume is incredibly low. Okay, and so we shouldn't really get terribly too confident here when there is absolutely no volume or incredibly low volume behind the price movements. Okay, so there isn't really any decent kind of volume pushing this price up higher. Okay, the volume is lower. Let me go ahead and draw a trend line on here, a horizontal line, just so you can kind of see where this stacks up to. Let me draw it in right there. So this is the peak last week at 6.4 on the volume bar, right? And we can see that over here on the 7th of November, the volume was higher. We can see that up here in July, the volume was higher, and we still know what happened after that. We can see the volumes were significantly higher up in May, higher in June. So I can't really get bullish thinking that we are moving up when the volumes are not even able to breach that of what was going on earlier in the 2021 or 2022, late 2021. Even up here, there was higher volume in November of 2021 with this particular candle. Just 1 week here has higher volume. So it's hard to kind of get too carried away and too confident in a space when the volume isn't behind this movement to the upside. This to me just tells me that price is gravitating in one direction only, mainly because of the DXY dropping down. When the DXY drops down, you need more dollars to buy your assets. So understanding how, we try to value things in dollars, but actually the dollar itself is getting undervalued, meaning you need more dollars to actually buy it. And this is kind of what inflation does as well. So just understand these things. Now, from an RSI point of view on the weekly time frame, it's not too bad, but it has progressed up quite a bit. So we'll keep an eye on that. From a daily standpoint, we can see that this RSI has got some bearish divergence with it. So let's go ahead and draw that in. We set up here a higher high, okay, on the RSI, whilst we're going down lower on price. You can see that right in here. Okay, so bearish divergence on the RSI, not bullish divergence. I know some people want to call it that, and it's not. But nonetheless, it is what it is. So essentially on Cardano's kind of timeframes here, I would say that we probably still have the potential to move up a little bit more. I don't think we're fully done just yet, but we are getting into a position now where I think we are going to start seeing this next corrective structure to the downside. Not necessarily saying new lower lows, but I'm thinking we are in the potential, or maybe after the weekend, we'll see. We'll see what the retailers do this weekend, but I don't expect terribly too much. A little bit of a push up higher, hit that kind of 37-cent area, get rejected, and then next week start to really get hit hard on the charts. But we'll see how that kind of goes. Like I say, I'm optimistic, but I don't think the data is really giving us the signals to say that we are in a bull market. I think I'd be quite happy if we just go into corrective structures for a few months and there's no trends or anything like that. That's great, because that will allow us then to kind of still accumulate whilst keeping prices down low. And I still think prices are incredibly low overall, so there's opportunities and everything that is going on here, but I'm just not confident in thinking that there's a need to be saying bull market when there's no data here to actually suggest we're in a bull market. I'm going to leave this video there though. If you found it useful, smash that like button. I do appreciate that. If you're new, subscribe to the channel by tapping the bell, selecting all the notifications. You won't miss another video. Join us down in Discord, linked in the description down below. Other than that, guys, have a fantastic day, and I'll catch you all in the next one.